Good morning. Welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Menaka Doshi.
And this is IndianOpen and I'm Neeraj Shah. Good morning, Menaka. Good morning, viewers. Seems to be a busy day.
Well, yes, lots in the headlines today. Starting first with the Bloomberg exclusive, and it's about Infosys. Infosys CEO Salil Parekh says it's time to sacrifice margins for growth, highlights the need to grow presence in the Internet of Things market, that's the IoT market. Chinese conglomerate Fosun International joins the race for Fortis Healthcare, puts in a non-binding bid to pick up less than 25% stake in the company. IMF maintains India's growth forecast for the years 2018 and 19, even as it hikes the growth forecast for US and Eurozone for this current year. And as ATMs run dry across the country, Finance Minister Arun Jaitley says the cash crunch will be tackled soon. RBI blames the shortage on logistical issues. And in global politics, White House officials are said to have spoken to North Korean leader Kim Jong-un, preparing the ground for his meeting with Donald Trump. And the most interesting tweet I read this morning is, if that meeting does in fact take place, will Trump then be the recipient of a Nobel Peace Prize? More interesting things can happen in our lives than we can anticipate.
You bet.
But a busy day for trade today.
Busy day for trade today, Menka. We're likely to start off marginally higher, if you will. Look at the Asian bourses. They've been, all over the place, yes, but marginally in the green. Nikkei is up about 1%, but look at the others. Hang Seng slightly off, Hang Seng up in the green, Shanghai slightly off, the SGX Nifty pointing towards about 0.25% uptake. If indeed this is how we close, this will be the 10th straight day of gains for our markets. But keep in mind, the trade yesterday showed that the market is now trying to take this defensive bent of mind. Look at the Sensex gainers. Very interestingly, when I looked at the list of gainers at the close of trade yesterday, enough and more number of names which were defensives. Look at the top three. So Power Grid, NTPC, HUL, you had ITC coming somewhere out there as well. Coal India marginally in the green. So amongst the top 10 gainers, you had 6 or 7 names which have these defensive bent of trade. People tend to favor them when they are not quite sure from a trade perspective or from a hedge perspective as to what the high beta names would do. And yesterday was a clear indication that at least on the large cap space, we had that happening. So let's wait and watch. We've had 9 good days of trade. The Nifty itself has gained about 420 odd points. If we indeed have another 20-30 points in today's session, before the big earnings kickstart tomorrow onwards, we will have 10 straight days of gains. There could be some bit of a reason for market to believe that there should be a pause coming in. But the late buying continues. The last few days, Menka, the trade has been that whichever way we may start, the last couple of hours of trade, we see some buying coming in, seeing some long build-up happening as well, and that was the case yesterday as well. We started off dip midway through trade. In the last 2 hours, there was some bit of buying that came in, and some bit of buying on the futures and options side. The FI long positions, the long exposure that FIs have, at the start of the series were about 18-19%, currently at 29%. So yes, they are selling cash in a big way. Yesterday too, the cash sell figure was fairly high, but on the futures side, and typical hedging out here, they are increasing the long exposure in a meaningful way. So that's fairly interesting. Just the fact that the cash market selling continues. Yesterday was a big number too, 931 odd crores, if I'm not wrong, of cash market selling by the FIIs, 951 crores, excuse me. So that number was fairly high in trade yesterday. But let's see. And as I said, ahead of the earnings season really beginning in full earnestness tomorrow. Until now, we had one Infosys and a couple of other small names. Growth Finance is not small, but one-off. Tomorrow onwards, the IndusInd Banks, ACCs, TCS, etc. take place.
Starts in that sense,
So all of that is very, very interesting to watch out for. And of course, we'll also, before we talk about stocks, an eye on what's happening on the global front as well. One, what the INR is doing versus the dollar. Two, what's happening on the yields as well, Menka.
Yeah, I know. I think a couple of things. You mentioned 10 straight days of gains. This for a market that's overcome trade issues and overcome geopolitical issues with what happened on the weekend with regards to the strikes against Syria. So that's something to say. And a quick check on what's going on with yields in the US. You want to keep this on your radar because you're seeing an interesting convergence there, not new, definitely not from this week or last night, but one that's been building over the last few days. And the reason we bring it up this morning is because the 2-year yield in the US last night hit 2.4%, I think the highest since 2008. And look at the 10-year at about 2.8%. So you can see that long 1-year trend line, or the trend lines for both of those show a degree of convergence. So that's something to watch closely for those who are watching yield markets or bond markets for indications on where, global markets are headed. But that said, let's tell you what,
No, just a few stocks, Meghna, that need to highlight. I mean, stocks that investors should or traders should keep an eye out for today before we get to first word. So 3 or 4. I mean, the obvious one, of course, Fortis. I don't know what kind of an impact it's had on the stock price movement, but hey, third or fourth, whichever you put the Bhavin family bid as technically, but the third or the fourth bid at about 156, and we'll talk about that in detail. But do keep an eye out for Fortis Healthcare. This will be one interesting one to watch out for. I thought from a numbers perspective, Tata Spun Giant numbers are fabulous. I mean, the management has been talking about this now for the last 2 or 3 quarters, that the tailwinds look strong. But revenue is up 46%. Look at the margins at 25% versus 15%. That's 100 basis points, 1,000 basis points expansion on the margin front that Tata Spun Giant has delivered. It's something that has happened in the previous 2 quarters as well, but just shows that the tailwinds continue for this space and for this company in particular.
Won't we see this for most metal companies, given that it's been a fairly good quarter from a pricing point of view, hasn't it?
Yes, completely. Okay. So, but excellent numbers. More so that this runway for, as you said, all metal companies, but Tata Spun Giant in particular just continues unabated. So should be interesting to see what Tata Spun Giant does in the session today.
Vedanta?
Yes, so bunch of brokerage notes. I just chose one. CLSA, they have an upside target of 42%. Macquarie have cut the target price, but they've cut the target price to 4 or 5 from 435. That notwithstanding, the target price still is fairly higher, so people continue to remain bullish. I mean, CLSA, of course, amongst other things, believes that they've acquired Electrosteels at attractive valuations, and we'll talk about that, I'm sure. Last but not the least, Meghna, one stock that's been in the eye of a storm, Talwalkar Fitness, ever since they did that demerger and change of names, etc. Multiple people have spoken about it. The stock was locked on a 5% circuit low yesterday as well, but it's been the 20th session of a lower circuit for Talwalkars. And a mutual fund goes out and sells shares after the stock has lost so much in value, just shows that people want to get out of the stock, lock, stock, barrel. Doesn't matter. When they get a chance, they'll get out of it. Yesterday was probably the first chance that such high volumes happened, but just continues unabated. Look at that, 1 month, 70% wealth destruction.
Well, you're going to want to add Infosys to that list of stocks to watch for this morning, because that's the top story we're tackling on First Word this morning. Sarita Rai of Bloomberg News joining in to talk about her exclusive interview with Infosys CEO Salil Parekh on his plans for the company, and some serious comments coming in on margins there. Vedanta's Rescue Act has brought down, or will bring down, Electrosteel shareholders' stake in the company to less than 10%. We're going to talk about what that means for public or minority shareholders and how they should approach resolutions from here on. We're also going to talk about, on First Word this morning, a 4th bidder in the fray for Fortis now, with Fortune International throwing in its hat in the ring. Somit will join us to take us through the details of that offer. And as different parts of the country grapple with a cash shortage, we'll tell you what the government and the RBI has had to say about the situation.
Well, as Meghna said, on to the first piece on First Word. It's a Bloomberg exclusive. Infosys CEO Salil Parekh believes now is the time to sacrifice margins and invest in advanced technology and skill development. In an interview with Bloomberg Sarita Rai, he says this would be crucial to stay relevant to clients in the future. Sarita, in fact, joins us right now on the phone line from Bangalore with the big takeaways from that interview. Sarita, what did Salil Parekh have to say? What did he lay emphasis on?
Yes, so he was talking about investing consciously towards positioning the Infosys of the future. In fact, his words were that if Infosys had to invest in advanced technologies and skills in order to capture the opportunities of the future, the time to do it was now. And that includes pumping more money into technologies like Internet of Things, and to retrain workers in the skills that are, in demand in the market, as well as localizing the workforce in the key U.S. market, which accounts for about 2/3 of Infosys' revenue.
Okay, Sarita, I know that he said in your interview, and this is the comment that that is going to capture the imagination of the markets today, that he thinks it's worthy to sacrifice margins for growth. Can you help elaborate on that statement, the context he gave you for how he hopes to achieve that, and whether he thinks that growth is a near, medium, or long-term feature?
So, Mehta, what he was talking about was several different strategies to make Infosys relevant. And as you know, Infosys has had a really horrendous year in 2017. And, with the leadership change and Salil Parekh coming in, there has been a strategy update. And Parekh thinks that, alongside investing in technologies and reskilling people, there's going to be a big accent on localization in the U.S. All of that is going to cost money. For instance, they're going to set up a training center on 60 acres of land in Indiana. They're going to hire big time and train college graduates in the U.S. They're going to go after acquisitions that will set them up for digital services play. They're going to chase after new digital clients by expanding the sales team. So there's a lot of things that he's trying to work on, Menka.
Sarita, your story doesn't speak of his view on why Infosys has decided to sell both Panaya and Skava. Did he speak to you at all about that? Where did that decision come from? What was the politics behind that decision, if any?
He, of course, would not speak about the politics, but he did speak about Panaya and Skava, and he said that Infosys had taken Infosys had taken stock of its latest strategy and its focus on the business of client service needs, and then built a set of criteria. The management looked at the businesses internally. And Panaya and Skava are no longer meeting the criteria that Infosys has set for itself. So Parekh's plan is to look for alternatives outside. He says they will still be part of the ecosystem. We may still partner with them, but they are up for sale.
Okay, I have a final question. I don't know if Neeraj has one more, but this has more to do with the contrasting styles of management that Salil Parekh presents versus the erstwhile leader, the previous leader, which is Vishal Sikka. Parekh seems to be a little bit more measured, more muted, less aggressive, at least in the way he's speaking right now, not necessarily in the way he implements strategy. What did you take away from the difference in body language, the difference in approach, and whether the sort of the turmoil and the tumult at Infosys is finally at an end now?
Well, Salil Parekh certainly hopes so. So the difference in styles of the two people, the most obvious difference is Vishal Sikka was more flamboyant, very voluble, and certainly out there. And Salil Parekh comes across as a really measured, more inscrutable person. He says his management style is all about data. He says he wants all of the decision making to be based on data. And he plus also says that he doesn't like getting secondhand information. So he wants to deal with people one-on-one. Vishal Sikka was based in the U.S. and Salil Parekh is just moving to Bangalore from Mumbai. So that is a really more hands-on approach that Salil Parekh is bringing, but certainly a very, very wide contrast between the operating styles of Parekh and Sikka. Sikka very much more aggressive and voluble. Parekh very much laid back and measured.
Sarita, thanks very much for joining us this morning. That's a quick glimpse of what Sarita has in her story. If you log on to BloombergQueen.com, you'll be able to read more of her conversation with Salil Parekh and his vision for the company. Let's move on now to the next story we have this morning. Electrosteel Steels will soon be a Vedanta group company. The Kolkata NCLT cleared Anil Agarwal's 5,000 crore proposal for the stressed steel company, but the lenders will still have to take a haircut. But I think more interesting than that is what happens to the minority shareholders, because these are questions we've been confronted with for the last several weeks now as companies go through the insolvency and resolution process, and minority shareholders have asked what happens to the paper we're holding. Well, it's not worth much, let me tell you, because based on the resolution plan that was filed by Vedanta last evening, they said that a 100% subsidiary of Vedanta will be infusing both debt and equity into Electrosteel Steels in order for Electrosteel Steels to be able to pay off its lenders. And in infusing that equity, Vedanta, or Vedanta subsidiary rather, will become a 90% owner of Electrosteel Steels. The current shareholders of Electrosteel Steels will get reduced to less than 10% because some equity will also be handed out to lenders in exchange for, I think, this entire resolution plan being operationalized. So to get a sense of what this means for minority shareholders, we're joined this morning by Abizer, Diwanji, partner and national leader of financial services at EY, a man who's also sort of helping craft many of these resolution plans. Abizer, dare I say that minority shareholders are going to be a little disappointed, and not just with this Electrosteel resolution plan, but the conversation over the last several weeks has been, hey, you know, these companies that are undergoing insolvency or resolution are punts, you know, because the new buyer will come in, take over, infuse money, the company will do better, and therefore our equity value will increase. But that's not the case.
Yeah, but that's tough luck, right? At the end of the day, you know, equity holders are at the bottom of the pile anyway. So if anybody else who's senior to them in terms of collections are not getting paid, then the equity holders will suffer. So while, you know, there is all sympathy for the minority shareholders, unfortunately, they are at the bottom of the rug.
Abizer, you know, a lot of people talking about how with the negative book value that Electrosteel anyways had, that paper was trading at what, 2.5, 3 odd rupees to the face value of 10. This was not unanticipated. I think the problem or what's caught a few people by surprise is the extent of the haircut and the fact that the 10% is shared by shareholders and creditors alike. So you don't exactly know what's the eventual value that anybody who was holding whatever percentage of shares in Electrosteel will eventually get.
No, clearly. So I don't think there is clarity as to who's going to get how much. But if you look at the pool, the 10% pool, I mean, even if you take today's market cap of 700 odd crores, this is the market cap today, and that will get reduced down. And if you see the equity infusion itself, which is 1,805 crores that Vedanta is putting in, that basically gives it a market cap of around 2,000 odd crores. So out of the 2,000 odd crores of market cap, 90% of which is going to be owned by Vedanta, which leaves roughly 200 crores for the existing legacy shareholders, plus the creditors. So because we don't know the breakup, I'm assuming the creditors are not there. Even if the creditors are not there, we're talking about 700 crore market cap versus 200 is what the shareholders may get. So assuming if it's a 50-50 split, the 700 will come down to 100 at best. So clearly, you know, the market guys will take an erosion, but the shareholders will take an erosion. But what they're looking at is potentially an upside that a Vedanta can bring to them, which an Electrosteel could not.
Now, if I have one quick last question, Abizer, and that has to do with, do you anticipate that many more resolution plans from here onwards will treat current or existing equity shareholders in a similar fashion? Because I think we've seen this happen with many of the other companies, whether it's Bhushan or otherwise, you know, minority shareholders asking the question, hey, look, what are we going to get out of this process? Well, nothing, right?
Yeah, you're right, Mehta, nothing. But, you know, what we really need to look at, if you want to look at whether this is fair to everybody, is to see what kind of enterprise value people are paying. Because clearly what people are going to do is going to say, here is the enterprise value that I offer for a particular company. People will be then paid by seniority, and if there is something left, the equity holders will get. So you're right, if you look at the current dealings that are happening, I mean, Bhushan Steel, etc., Tatas have offered 34,000 crores, I'm saying, you know, whatever we read in the press, and 50,000 crores is what the secured creditors, financial creditors need to get, then clearly the equity guys will not get anything. So I think in many, many cases, we will find that because these companies are over-leveraged and hence in NCLT, we will actually find that the equity holders will be left with nothing.
All right, Abizer, we'll leave it there for now, but, you know, we are going to talk about this a little bit more through the course of the day. Abizer Diwanji there trying to explain to minority or to all shareholders that, you know, don't expect your paper to be worth much at this point in time. If a company is insolvent, you are at the bottom of the pile, as he pointed out.
Yeah, I like the term that you used, Mehta, the punt. And it was known that maybe it was a punt. Now this haircut will lead the punters to realize that it's probably not a safe punt at all.
Look, you know, we posted this story late last evening as soon as the resolution plan got filed, and I've got like woeful shareholders on my Twitter timeline saying, oh, but this is not fair, and, you know, how can they do this, and this is cheating. But it's not. If the company is over leveraged, you know, then you are really the last person in the credit hierarchy or the hierarchy of any sort to be able to recover. That's what risk capital is. That's what equity is. So I'm sure it seems terribly unfair right now, but I think people will adjust their expectations as they see more resolution plans become public, and they realize that, look, you know, there's maybe not any big immediate pop in the stock that you're going to get in any fashion.
Yeah, it'll be interesting to see what happens to some of the other stocks over the course of the next few days.
Big ones are lined up, right?
Okay, the third piece is the line of suitors for Fortis Healthcare, which has just gotten longer. The company's received a non-binding bid from China's Fosun International, which has proposed a fund infusion of 100 crores within 45 days. But that's on the condition that Fortis enters into a 1-month period of exclusive talks with the company. After due diligence, Fosun will clear a 2,300 crore bid for the hospital chain. Samit Sarkar is standing by with the details of the offer. Samit, if I have not already laid down everything, what is it that the company says? And the Fortis board, I believe, is scheduled to meet tomorrow to mull over these different bids. Now they have a lot more to consider.
Yes, the Fortis will be meeting tomorrow to consider all the proposals that they have. So the current proposal, if you see, in this, Fosun is looking to invest close to $350 million US, that is close to 2,275 crore rupees. In this, as Fortis is in needs of immediate fund, Fosun will be infusing around 100 crore rupees as convertible debt within the next 45 days, while the remaining amount will be invested for fresh equity shares. So overall, they are investing close to 2,275 crore rupees at 156 rupees per share. Now the catch here is that the company will invest 100 crore rupees for convertible debt instruments only if Fortis gives them the 1-month exclusivity period to undertake their due diligence and to negotiate the offer. Now the due diligence is expected to take at least 3 weeks. And now why are they doing this due diligence? To see whether they can grow the top line, reduce the expenses of the company, and to see whether they can settle the issues regarding other financial and the legal liabilities that the company has, and other issues that the company has related to the various investigations and transactions linked to the promoters. Now after completing that due diligence, there are chances that the company might lower the investment amount of 156 rupees per share, or even cancel the deal, because the offer clearly says that they will be negotiating this offer after they complete their due diligence. And the offer also says that Fosun at any point of time will not hold more than 25% stake in Fortis, which also rules out the open offer possibility. Now, one interesting fact in this offer was that they are also asking the current management and the key doctors to participate. They are asking around 100 crore rupees from the current management and the key doctors of Fortis Healthcare, and then they are asking them to invest close to 100 crore rupees in the company, and they are also intending to adopt new management incentive plans. So this offer that Fosun has given of 156 rupees per share is somewhat similar to the earlier offers that the company has received. Earlier, Manipal had offered at 156 rupees per share, while IHH at 160 rupees per share, and Hero and Burman Group had said that they will invest in the company on the price higher of the SEBI price, or 156 rupees per share. And now it is the fourth offer that Fortis has received from Fosun International to invest in the company at 156 rupees per share.
Yeah, I'm sorry, I'm not the expert on this. I know you've been following this a lot more closely, as probably have Samit and Darshan and Yatin, but to me, the full takeover offer seems to have come only from Manipal, right? IHH is not necessarily a full takeover offer. They seemed wishy-washy, non-binding definitely. The Burman Munjal offer is a capital infusion offer more than anything else. And now this offer seems to be conditional on many things, non-binding, and again doesn't seem to be a full takeover offer of any sort.
Yeah, right? And asking key employees to pump in some money as well. Well, in addition, as a binding condition. Yeah,
so it'd be interesting to see how the market views this. There's only one other thing to add, and I don't know if Samit or you have a response to this, but at some point, if any of these three bidders are as serious as Manipal, then this becomes a competitive bid situation, which then they just go and, offer these, I mean, no longer try and route this through a capital infusion / board process, but just go out to shareholders and say, hey, look, this is the price we're offering, will you tender? But then that becomes a full-on acquisition offer, and it's not clear right now how many of the four, besides Manipal, have the stomach to do that.
Yeah, well, minority shareholders would be hoping that one of them finds the guts and the stomach to do that. It's only better for them. But yeah, it'll be interesting. I mean, all the bids centered around, I'm just talking from minority shareholders' perspective, all the bids centered around this 155, 160.
But you got to remember, do you really want to get into a bidding war for an asset that's currently facing several investigations and, unquantifiable liabilities at this point in time? Unless you're quantifying them at, let's say, 2,500 crores or 3,000 crores or whatever, and saying, okay, I'm willing to take that hit, right?
Yeah.
So, interesting.
Interesting indeed. Okay, so that's the word on Fortis as well. The last piece on First Word today is about the biggest news of the last couple of days, which is the cash shortage in certain parts of the country. Now, media reports across the media hemisphere showed that the ATMs in Telangana, Karnataka, Madhya Pradesh, Bihar, parts of Maharashtra, and maybe some others are running dry. But what led to such a scenario, and how prepared is the government and the RBI to tackle the situation? Ira Duggal puts all of these questions into perspective in this report.
There are a couple of ways to try and understand what has been going on with respect to this story on a currency shortage that has emerged. Firstly, of course, the government has acknowledged that there is a real shortage of currency, at least in some parts of the country. And they came out on Tuesday in full force saying that we are going to try and alleviate whatever shortage there is in the market by either printing more money or supplying the money that has already been printed but not put into circulation. So some of the numbers that the government talked about, they're intending to step up the printing of 500 rupee notes by 5 times. 2,500 crore worth of new notes are being printed every day. 1.75 lakh crore worth of currency notes already in reserve. So they're essentially saying that, look, we have enough currency. It's just a question of us being able to move that currency over a period of perhaps days to areas where a currency shortage has emerged and then alleviate any concerns that exist on this front. That is the response. The government came out with a response. The Reserve Bank of India also came out with a response saying that they're monitoring the situation closely, that any concerns that have emerged will be addressed because there is enough stock of currency with the Reserve Bank of India. They also said that they are watching what is happening in terms of replenishing ATMs and also adjusting ATMs to some new configurations of notes and cassettes, etc. So they are monitoring all of that. And just as a foolproof measure, they are moving additional currency to areas where currency shortage has been detected. That is the response. The important question is, what was the cause? And there, unfortunately, it's very tough to actually answer something like this. Even the government officials we spoke to, including Sanjeev Sanyal, Principal Economic Advisor, stayed away from speculating on what had led to this. There are normal things like seasonal impact of, say, harvest season, festivals, a pickup in inflation. But the Reserve Bank of India budgets for all of that. So the government has acknowledged that this is an unusual increase. Where did that unusual increase come from? One specter of information that we got from the government is that there is some extent of hoarding that they're detecting. They are essentially detecting that by the fact that the amount of currency which goes out of the banking system doesn't come back in. That also reflects in the fact that currency in circulation rises at a faster pace than that is normal. And if you look at the currency in circulation chart, you'll see that over the last 4 to 5 weeks, there has been a slightly higher pace at which currency in circulation has been increasing. So if there is some evidence of hoarding, perhaps the government would want to clamp down on that as well. One question, and we raise this, and one issue that we raise as responsibly as we can is the issue of depositor confidence. When we asked Sanjeev Sanyal as to whether the government is at least mindful that the whole host of bad news on banking could have hit depositor confidence, he said if those concerns exist, the government will move to try and alleviate them because, in no ways is the shortage of currency a reflection on the solvency of the banking system, and it absolutely is not.
All right, there you are, summing up for you what's happened over the last 24 hours on that cash crunch situation. And this morning, not in studio with us because she's out checking ATMs to see whether they do really have cash or not. But that's, in jest. Serious situation. You can read more about Ira's conversation with Sanjeev Sanyal, where she raises several of those issues on our website, bloombergqueen.com.
Yeah.
All right, I think we're going to wrap up first word here, but a quick teaser for the special interview that's coming up at 9:30 this morning. Aswath Damodaran, and I think this newsroom is a fan of his work. You had the, sort of privilege to speak with him yesterday. Yeah. How did that conversation go?
It was fabulous, Mehta. I mean, just to get off air, on air, both the conversations that we had with him, quite fabulous about how he goes about valuing the companies and the opportunities that he does. Sometimes quite different than the rest. I mean, me, Kaushik and Yatin then talked to him for about at least 20 minutes after the interview happened as well. But more on that later. Just 2 or 3 quick things. I mean, in the interaction, we'll hear from him how he views Indian banks. I tried to tie him into, his global perspectives and how does he view special situations like the ones in India. According to him, and he confessed that he hasn't studied them in great detail, but according to him, people should just reset expectations from the PSU banks because the story is not known. And from pure valuation perspective, he's right. He's saying that you cannot value a story until the whole story is out on the table. And he believes it's a case of investors' faith being deceived by these banks. Similar, he put it or he likened it to what happened in 2008 with the global banks, wherein investors were deceived. And in this case, he's saying that Indian investors, or investors by and large who invested in Indian banks, have been deceived. So don't go out and try and value these, because it's just a difficult thing. But I must say, he's very bullish on Netflix.
Well, blockbuster numbers last night from Netflix, partly helped why we saw that strength in the US markets, though after hours, in the after hour trading, and then this morning in Asia as well. Yeah, so and he said that he'd done this whole analysis while on the long flight. Then he came in Mumbai, couldn't sleep, so therefore he did it further. But I also asked him, Menka, whether it makes sense for digital streaming entertainment services in India, which are small in nature, to the likes of Netflix or an Amazon Prime, etc., or for that matter, even a Hotstar, to try and battle that. He had some very interesting thoughts on that subject too. So I tried to try and Netflix and Amazon Prime with what Indian offerers would do or can do. So some very interesting takes on that as well. The Indian market is from both an entertainment and news consumption point of view very different from the US market, just because of the regional preferences. True. Language and regional preferences, right? I think the multitude of languages makes it difficult to consolidate. If you consolidate the full market and you're across languages, then you've got a big play going. But if you're just an English player or just a Hindi player, you're working in niches as opposed to a mass. So interesting to hear that. By the way, he's also spoken of Infosys and whether Infosys should be chasing growth or margins. And that will be interesting to hear. Unmissable interview with Aswath Damodaran playing out this morning at 9:30 a.m. So make sure you stay tuned for the course of the next hour or so to catch that one. We're going to wrap it up on First Word here, but up next is the rest of Indian Open and Markets Open.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Welcome back. You're watching Indian Open. Let's see how the Asian markets are faring at this point in time. And we're looking at strength in the Nikkei. It's up as much as 1.3%. On the other hand, mixed cues coming from the Chinese market. So Hang Seng marginally in the green. On the other hand, Shanghai declining by as much as 0.5%. When it comes to the SGX Nifty, well, muted cues coming in, but, well, positive all the same. So currently inching towards the mark of 10,600, currently trading at a little over 10,580. That's as far as your global cues are concerned. Let's also take a look at what the derivatives markets are indicating. We have Navneet Saluja joining us. Navneet, good morning.
Good morning, Agam. Well, all eyes will be on the 10,600 mark as SGX Nifty is inching very closer to that. Yesterday, we did see a mild bit of uptick when it came to the open interest for Nifty futures. Remember, Nifty is trading above all its key moving averages as of now. But if you look at Bank Nifty, that's the one which is going to be in focus as it's nearing the 100 DMA of 25,403. And there was some long build-up which you saw in yesterday's session as the open interest was up nearly 5%. 0.5%, but we didn't see any major change coming in Bank Nifty in yesterday's session. In terms of volatility index, some comforting sign for the bulls now as the India VIX is slipping lower. 14 was the level where it closed. It was down nearly 1.5%. In terms of put call ratio yesterday, the Nifty PCR slipped slightly to levels of 1.63, whereas the Bank Nifty PCR also sees some marginal dip of about it closed at 1.47. Let's pull up the option strikes and tell you what exactly happened. So put writing actually continues around the 10,500 mark, and some bit of call writing came in for the 10,600 strike. Remember, this is the level that will be keenly watched out because yesterday there was addition on the 10,000 call as well as the put strike. And remember, the base for this market is moving higher now. If you look at the open interest concentration, it is at the 10,400 put and the 10,700 call strike. What did the institutions do? Well, there was some bit of addition seen for longs as well as shorts, but I just want to highlight, if you look at the percentage, we started this series at 18%. Now the longs have gone up to 29%, but still they remain net short to the tune of nearly 71%. On the index options side, the FIs have been buying some bit of protection. So yesterday itself, the maximum addition came in for the put long, and they also continue to ride put. So watch out what happens in today's session because they sold aggressively on the cash side. In terms of stock futures, that is going to be in focus. Balrampur Chini is the one which is out of band, so watch out for this one. 2% addition. The underlying was up nearly 2% in yesterday's session. Besides this, I'll definitely be watching out for DCB Bank. This is the counter which has seen aggressive long build-up in the last two trading sessions. Yesterday also the open interest was up 17%, 6.5% higher for the underlying. And the other one which will be in focus will be Power Grid. That was the top gainer on Nifty, so watch out for this one as well. Back to you guys.
Okay, we will watch out for these. In fact, as we said, I think the index yesterday did have this, if I can use the term defensive, because a clutch of names which are defensive in nature, the Power Grids, NTPCs, HULs, Coal Indias of the world, had a move yesterday. Not so much the high beta names. Maybe 9 straight days of rally will lead people to do that, Agam.
Right, absolutely. Well, you know, just to get in a view as to what the fundamentals is telling us, let's bring in Vinit Bolinjkar, head of equities research at Ventura Securities. Vinit, good morning and thanks for joining us. What are you making of the cues? We are looking at strength in the Nifty. It's a gradual up move, not necessarily momentous, but you know, what are you making of the current cues and how much of it is linked to global cues?
So I believe it is not only the global cues, but also the strong result season where companies have come up with extremely good results. And in a market where the sentiment is so morose and people expecting valuations as expensive valuations a reason to not be in the market has really surprised everyone with the strong bumper results that are coming out. And as the result season pans out with lesser disappointments and more encouraging news flow, the market is gradually re-rating on the higher side.
Well, interesting. You spoke about results. Let's talk about some stocks in news and some results which we have anyways spoken about already. Vinit, does this Fosun bid for Fortis really materially make a difference to the stock? Part two of my question is, whichever bid gets approved yesterday, since all of them are centered around this 156 to 160 odd levels, what is in it for a minority shareholder even after the board meeting and the decision tomorrow?
So minority shareholders should remain invested. It is a very good franchise. To build up a franchise of this magnitude and scale is not to be replicated in a very short-term kind of point of view. So minority shareholders should continue to remain invested, and we will see the rewards being panned out once this imbroglio of the ownership is decided one way or the other.
But you happy choosing a Fortis Healthcare over the other listed hospital chain ventures? I mean, let's assume somebody wants an exposure to the healthcare space, but not the pharma manufacturing companies. So there is an option of Apollo, there's an option of this, or people can look at maybe, you know, specialized ventures like Dr. Lal Path Labs or Thyrocare. Where does Ventura as a house, or where do you as somebody who's telling your clients to invest into find favor?
So, there are two things. One is buying for value and taking advantage of circumstances. So, given the circumstances, we have seen Fortis present a good buying opportunity now, and over the next couple of years, the stock could easily trade over 200 plus. And having said that, if you look at Dr. Lalpath and Thyrocare, between the two, Dr. Lalpath has done several acquisitions down south to gain market share, which have not necessarily been profitable in nature. They, in my opinion, they have overpaid out there. So that is why the stock has been dragging. Thyrocare is another high growth story which should evolve going out as its a radiation business blooms, and it continues to generate spectacular margins despite of very competitive pricing. But its valuation is trifle on the expensive side, so it will be a slow, steady compounder. But what we have in Fortis with us is that we will be seeing, once the new management comes in and they clean up the balance sheet and get to go about their daily business, that Fortis will start looking up. Healthcare is a very strong focus area, and with India's teeming populations and India being the place for international health travel, I think Fortis, with its presence pan-India, is extremely well placed to benefit from it.
Okay, so that's as far as Fortis is concerned. I actually wanted to address what's going on in Titan Company, because we've had a Morgan Stanley report which has downgraded Titan from an overweight to an equal weight. And I want to mention that Morgan Stanley by no means is negative on the stock. They are suggesting that Titan remains their best play when it comes to discretionary consumption. However, I was checking the price to earnings ratio on Titan right now, and it currently stands around 79 or 80 times. And that certainly is well above its previous 5-year, 7-year average. And that's also the reason why Morgan Stanley is turning just a little cautious and suggesting that they're going to take a breather on Titan, and hence they have downgraded the stock to equal weight. However, that price target has been increased by around 15 rupees. That's not too much. It's currently standing around 1,065. So we'll wait and watch whether or not this dampens sentiment on Titan to a certain extent. But of course, that said, there are plenty of other stocks that we're watching out for in today's day of trade. And in stocks and news, other than that, we have a bunch of earnings as well, which will come in, which will include Tata Sponge as well as 5 Paise. And of course, we're talking about the metal sector as well as earnings that we are keeping an eye on today. So we have Shraddha and Nikki joining us. Shraddha, I'm going to start off with you. Stocks and news today.
So you have AstraZeneca Pharma India, which will be in focus. That's because its parent company has said that they'll be looking, or they will be investing $90 million in the Indian unit over a span of 5 years. You also have Lupin, which has received a tentative approval from the US FDA for generic androgel. Why is that important despite it being a tentative approval? Well, it's a reasonably sized drug, nearly $1 billion. So given that the tentative approval has come through, the final also may. So you could see some sentimental reaction on Lupin. Jagran Prakashan likely to consider a share buyback on April 27, so watch out for that name. On earnings, we have Tata Sponge Iron, a fantastic set of numbers coming in, driven by operational efficiencies and good growth in the top line numbers. Revenues are 46%, net profit more than doubles to 47 crores, and EBITDA margins are also saw an expansion of more than 10 percentage points. 5 Paisa Capital, on the other hand, it was a mixed set of numbers because revenues grew by a strong 60% on a low base, but the net loss for the quarter has widened. And lastly, Ajmera Realty, where promoter Rajnikant Ajmera sold 1.4% stake in a bulk deal. So some of the stocks are likely to see reaction.
Right. So those are some of the stocks. But Nikki, you have updates on the non-ferrous side when it comes to metals?
Sure. So HSBC has come up with a note on the non-ferrous space where it says that the ongoing disruptions both in alumina as well as aluminium is expected to tighten the market condition in terms of the prices for the company. However, it says that the integrated producers are comparatively better placed as compared to the rest. However, it does say that Q4 earnings for non-ferrous space is expected to be a little lackluster given the cost pressures that these companies are witnessing. On back of this, it has also actually gone ahead and hiked price for Hindalco, which is an integrated player, raised the target price by as much as 7% For Hindustan Zinc too, the target price has been risen, which indicates a potential upside of more 16%. And for Vedanta, notably, this brokerage has actually gone and slashed the target price by as much as 6%. It also further adds that supply cuts that we're witnessing right now in the global markets due to ongoing disruption pose further upside for these counters.
And what can we expect from ACC, Nikki?
Not a great set of numbers that we're looking at. If you look at the top line growth, we are looking at a number of around 13% to a number of 3,508 crore. EBITDA, however, is seen coming down by as much as 9% for this company to a number of 380 crore. Margins are seen contracting to 11% as compared to nearly 13%. Profit is seen down by as much as 11% for this counter. Notably, we like to keep an eye out on the volume figure, which is expected to come flattish for this quarter on year basis. At number of 5% growth is what we're looking at due to the emerging capacity constraints. Also, we're looking at a dip coming in the EBITDA per ton figure, a dip of as much as 13%, and realization per ton, that's again another number that we like to keep an eye out on. That is expected to rise by as much as 8% for this company.
Nikki and Shraddha, thanks for joining us and giving us those details. But Vinit, I'm going to take the cement sector forward with you. What is your preference here? How are you viewing the sector? And in this sector, what is it that you like most in comparison to the other stocks?
So we continue to be optimistic on the southern plays. There are three of them: Sagar Cement, Mangalam, and in the north we like Shree Cement, and in the west we like Sanghi Industries. So these are our preferred plays. The larger pan-India plays we are generally keeping away from. We are looking at more focused plays. So in south, the volume demand is very high because of Telangana and Andhra doing well, and we have heard of even price increases happening there. So post Q4, I think the cement cycle could see an uptrend going out, given that we have got optimistic monsoon predictions.
Okay. That's Vinit Bolinjkar's view and some ideas that he likes within that space. I want to talk to him about Tata Sponge Iron as well, but it's 8:45 or 8:46, so that time of the show wherein we dwell towards the technicals for a bit. So let's try and do that first. And start off with Chandan Taparia. He's Associate Vice President at Motilal Oswal Securities. Joins us right now on the show with his thoughts on the derivative positions and the charts. Chandan, very good morning. Thank you so much for joining us on Bloomberg Quint. How are you approaching trade today, Chandan? 9 straight days of a rally behind us. We are likely to start off about 25-30 points higher. What should somebody who doesn't have any existing long positions in the markets do now?
Yeah, very good morning. Market continuously making higher highs from last 12 trading session, and especially it is moving upwards from last 9 to 10 trading session. We have seen a breakout in Dow itself. It has surpasses falling supply trend line, and the technical setup also suggests the extension of up move. On one day before yesterday, market opened negative because of the global concern, but managed to recover. That clearly indicates that every decline is being bought in the market. We have seen the surge in the put call ratio. Now put call ratio is at 1.65, near to historical highs. We have seen range bound volatility, and at the same time the put writing is visible at 10,500, 400, and call writing is shifting to 10,700. So all these data setup indicates the positive momentum could continue. As of now, till it holds about 10,480, I am expecting the momentum to extend towards 10,630, 10,650 level. Those who are not holding the position will suggest to take the 10,550 or 10,600 call to ride the continuity of the positive momentum towards 10,650 and higher levels.
And what are the stocks that you're betting on, Chandan, today?
Yes, we have seen the strong momentum in most of the counters. We have result from the Mindtree, and NIT Tech is on the radar. We are expecting the extension of the positive momentum. The stock has seen the built up of long position. It has seen surge in the trading and delivery volume and formed a positive price pattern. So recommending to go long on NIT Tech with a stop loss of 920 and expecting it to move towards 965 kind of level. Second trade I have selected from the ICICI, from the banking pack, that is the ICICI Bank. Bank Nifty is also holding the gains. It managed to close about 25,250 and holding about the same, but take it to 25,500, 25,750 level. And ICICI Bank is a counter which was beaten down, witnessed some negativity at the beginning of the previous series. Now some stability is visible, some put writing is visible. So holding about 290 may see some short covering activity. So expecting a spurt in the short covering, which may take it to 303 kind of level. One can buy with a stop loss of 286. Apart from that, I have selected one more heavyweights counter, that is ITC. It has formed a cup and handle pattern. We have seen the put writing at 270 strike and the longs are being added. It has surpassed immediate supply trend line and holding comfortably above its 50-day exponential moving average. So here also recommending to go long with a stop loss of 263 and expecting it to move towards 278 kind of levels.
Okay, we also have Bhavin Mehta, Vice President and Derivative Strategist at Dolat Capital joining us. Bhavin, good morning. Thanks for joining us. Tell us, how are you viewing trade on the benchmark indices now?
Okay, markets have witnessed good amount of pullback over last couple of trading sessions, holding on to 10,500, a positive sign. We have seen a shift in the OI concentration on the put side to 10,400. At the same time, the high OI concentration zone on the call side is now at 10,700. Against previously, it was picked somewhere in the range of 10,400 to 10,500. So our sense is that 10,700 will be the next key level with expiry ahead. Definitely no major short squeeze has been observed so far. However, with the way markets have behaved over last couple of trading sessions, there is high probability that we may see a kind of a short squeeze in very short period of time. That may see a spike up on the index, probably closer to 10,600, 10,700 range.
Okay, Bhavin, hold that thought. On to our special segment, Bloomberg Edge, where we have Jayesh Khilnani, who will tell us about a pattern that the Bloomberg terminal has thrown up. Jayesh, good morning. What's on your radar today?
Morning, Agam. So I'm watching out for Mahanagar Gas. That is because if you see the stock is down nearly 30-35% from its November high, and also the stochastic indicator has suggested an early buy signal maybe on the charts of Mahanagar Gas. Let's have a look at how the actual stochastic actually works. The stochastic, it helps you to identify when a price move is overextended. So, the 35% fall that we have seen from the recent high, that explains the overextended price move, and it also measures where the current price is in context to the recent high or low that the stock would have clocked for itself. Few conditions that you have to keep in mind while interpreting the stochastic indicator. Overbought line is placed at 80 and oversold line is placed below the 20 mark. Now there are two lines which get plotted on the indicator, and a crossover between the two lines gives you the buy and the sell signal respectively, depending on the direction of the crossover. On the chart of Mahanagar Gas, this is the November high that I was talking about, and you see steady decline below 900 at the moment, which is 35% lower from the November high. The bottom panel actually shows you the stochastic indicator. The green line is the oversold line, and you can see that the blue line, which is the stochastic, has actually crossed above the white line, but they are both below the green line, which means that there could be an early buy signal generated on the chart.
Does this early buy signal work beautifully, Jayesh, or has it done well after some bit of a rallies? I mean, what's the past shown us?
So Neeraj, works beautifully well. The hit rate of the indicator, that is nearly 66%, and if you had clocked all of these 66% trades, the net profit would be about 20% for the entire trade setup of last 1 year.
Oh, that's interesting. Mahanagar Gas, MGL. Thanks a lot, Tayesh. Thanks for joining in. Remember, the stock has been on a consistent downtrend because of that. I mean, ahead of the bulk deal and then post the bulk deal. I think the deal happened at 905, 910. Right. And post that too has come off quite a bit. So there is maybe some technical triggers out here. Maybe we'll talk about the fundamentals about Mahanagar Gas as well. So two stocks that we'll talk about with Vinit Bolinjkar first, Mahanagar Gas and Tata Sponge. But before that, I think Bhavin's stock ideas are still pending. So Bhavin, you want to fill us in with a couple of stock recommendations that you're giving for this morning, excuse me?
Okay, so we have seen a very strong build-up coming in for HUL. I mean, after a long period of time, it is once again coming out of that narrow trading range. It's a pretty much early sign as it should sustain above this particular level of 1420. However, yesterday's close of 1450 was pretty much a good one. So an intraday trade can be done at this particular level of 1450 with target price of 1490 on the long side for HUL. Stop loss should be placed around level of 1430. Any move below that should be negative for the stock. At the same time, we have seen a good long breakout in Jet Airways after almost 15 trading session of consolidation. Stock yesterday ended at level of 645. Target price is close to about 670. Stop loss is close to about 630 on the long side.
Okay. So those are a couple of recommendations, and duly, I mean, yesterday the aviation space was active. HUL too has started moving up a bit. So interesting names out there, both of them. HUL trading very close to or at new highs for that matter. But Vinit, those stocks that we were trying to talk about, first Tata Sponge Iron, fabulous numbers. Not that it was a surprise. I mean, they've been doing this now for the last couple of quarters, maybe, if not more. What do you make of the numbers? What do you make of the run in the stock already? Is there merit for somebody to go out and freshly purchase a stock like Tata Sponge Iron?
So the price is reflective of the fabulous performance, and further investments you should do with measured expectations. You know, the stock has really run up, and what is more is that this cycle is going to play out for a larger period of time. I think we are in a metal up move for the next few years, and with capacity expansion constrained due to the fact that biggies are going and acquiring stressed assets, you know, they are their balance sheets are getting occupied completely, you know. So I think capacity addition will slow down, number one, and number two, the demand metrics are extremely positive. So this should see Indian prices remaining firm, given the fact that raw material prices are expected to remain benign for a considerable amount of time. So the crude manufacturers of pig iron and sponge iron are seeing heydays coming through, and Tata Sponge is the biggest beneficiary.
Vinit, if I can deviate just a bit towards the non-ferrous side of things, we're getting a lot of updates with respect to Vedanta, and we've seen a lot of traction in something like Hindalco as well. What's your view on the non-ferrous metal stocks, and if there is anything that you would like at this point in time?
So Hindustan Zinc and Nalco are good place to look at. Nalco will be a big beneficiary of alumina prices going up, and Hindustan Zinc, because of its rich ore content, good cash flows, and capex announcements that are there, should sustain its pricing.
Okay, interesting. The other one, Vinit, was MGL. What are your thoughts here? Because the stock has been punished quite severely because of the exit of a large shareholder. Do valuations look compelling at these levels?
So, you know, there are two schools of thought that are going around. One is that MGL is extremely conservative, they conserve cash, and they go out after, they are very selective in the areas, in the geographies in which they operate. So even if a geography is thrown open where there is a lot of opportunity, unless, you know, they do not feel optimistic about that geography paying dividends immediately, they have, you know, foregone those opportunities. So because of this extreme cautious approach, what we are seeing is that the top line has not grown that handsomely. You know, your volume growth has continued to be benign. It's about around 6-7%. And with all the efficiency gains already accrued into the price and volume growth not coming through, I think the best of the performance is behind us. Having said that, this can be a good attractive level to buy slowly into the stock, you know, sip it over a period of time, because the stock is not going to be doing anything just yet, in my opinion, in the short run. However, when the CGD opportunity of the next 100 cities opens up, that is the time when all these established players will be bidding for new geographies, and that is when this stock will start its up move. Until then, I expect this stock to remain range bound.
Okay, expect that particular stock to remain range bound. That's Vinit's call. Well, moving on, let's address some stocks in terms of technical balance as well, and we'll get in your view on something like a power grid. So, Bhavin, I'm going to come to you on power grid. It's one of the big movers in yesterday's day of trade, and I'm sure you must have seen that there's been a substantial increase in open interest as well. What's your call when it comes to power grid now, and what would you advise traders to do with this one?
Okay, the power grid stock has seen a very good amount of base building up over last couple of trading session. My view is that overall we are looking at defensive names over last couple of trading session outperforming the high beta space. Now power grid, if it moves and closes above level of 225 in very short period of time, there can be a major up move that can be in offering for this particular counter. However, till that time I am expecting a range trade in this particular stock. So at current levels of somewhere around level of 205, the stock definitely can move closer to 220, 225. However, the major trigger should be observed once it closes about 225. That is where the major chunk of money can be made once it moves past that level. At the same time, on downside, all long positions should be protected.
Okay, Bhavin, just give us a minute. We're just going to address the pre-open rates, and as per SGX Nifty's indications, we were expecting a marginal uptick, and that's exactly what we're getting with respect to the Nifty 50 as well as the Sensex. The Nifty up 0.4%, the Sensex up 0.3%. However, we will wait for the rates to stabilize. Let's pull up yesterday's big gainer of the day was power grid, as Bhavin was just alluding to, and let's take a look at what that is faring, and that's also up and about marginally in the green. The other stock from the larger space is of metals, and let's pull up something like Vedanta and take a look at what that is doing currently. It's up as much as 1%. Let's also take a look at something like a Hindalco and see where that's currently trading at around 1% in the green, up at around 241. Let's also pull up something like Fortis Healthcare, considering we're looking at yet another player who's trying to enter the fray, and Fortis Healthcare now is much as, well, 0.5% in the green for now, currently trading at about 145. And in general, we're also tracking cues from, ACC, because we're expecting earnings today. Let's see how that stock is doing ahead of trade. Infosys, of course, where we've had a Bloomberg exclusive, where the CEO has suggested that they will likely focus on growth in comparison to margins this time around for this particular year at least. Remains unchanged, but we have seen a lot of volatility in Infosys, and of course we are also expecting earnings from TCS tomorrow, so if we can pull that stock up as well, it's up as much as 1% currently. So in the first few minutes, we're looking at Sensex up 0.2%, and Nifty up as much as 0.4%. Anything else that stands out for now, Neeraj?
It'll be interesting to see stocks which are hitting new highs yesterday, Agam, and see how they are likely to start off. So the likes of Avenue Supermarts or MRF or Nestle, some very strong moves that came in for those stocks. So interested in seeing whether they continue their rise or no. Difficult to say if really big blockbuster moves will happen, but let's wait and watch. I'm particularly interested in seeing what's happened to Bhushan Steel. I think the Electrosteel resolution plan that comes out puts into question mark minority investors' hopes of there being a rally into all of these names. Remember, it remains a punt now. You don't quite know what's the quantum of haircut that happens eventually when the buyer takes the whole of the asset. So it'll be very, very interesting to see if Bhushan Steel corrects significantly or no. There are some unnatural rates in stocks like SRF and IRB. I really doubt these would be the rates that will last, but let's wait and watch. But after a while, I'm seeing some activity on Coffee Day. Let's see if there is that continuation of the 6% gain that Coffee Day is showing well into the market open as well or no. The currency, which has corrected quite stiffly over the last few days, 65.74. This pain continues on the rupee vis-a-vis the dollar. Is not good musings. I mean, save for traders who like IT stocks and therefore will be happy. But it's been a very sharp drawdown in the currency vis-a-vis the dollar. So do watch out for this piece. And do watch out for the bond yields as well. Just want to see where they are. The last I saw, they were about 7 point, yesterday they were 7.4142, currently it's 7.49. So hovering around this 7.5 mark. Post the RBI meet and the commentary and the slight opening up of the window for FI investors as well hasn't quite helped the yields. They continue to remain at elevated levels. 7.49, I would probably call it elevated, not 7.8, but 7.49 still is an elevated level. Anyways, before we continue our conversation with our experts, let's go across to Sumit Sarkar, who joins in with the big brokerage calls for the morning. Sumit, good morning yet again.
Good morning, Neeraj. On the big brokerage call for the day, first we have is Edelweiss on future supply chain. Now, the brokerage has initiated coverage on the stock with a buy rating and a target price of 862. Now, the brokerage is expecting the demand to surge for the third-party logistics service provider triggered by GST, and according to the brokerage, future supply is well priced to capture this opportunity. Now, along with this, its rapidly expanding anchor client, that is the Future Group, will also ensure growth for the company going forward. Now, the future supply has an asset-led business model, which according to the brokerage will help the company generate strong free cash flow going forward. The brokerage is expecting the excess cash surplus to be around 26% of the net worth by financial year 2020. It also sees that the improving working capital will help company improve its return ratios. Lastly, it is expecting the company's revenue, EBITDA and net profit to grow at a compounded annual growth rate of 36%, 33% and 36% over FY18 to FY20. Second, we have a CLSA on FMCG sector. Now, the brokerage is saying that the sector had seen weak rural growth in the past, but the outlook for the rural growth is now improving on the back of normal monsoon expected in 2018 and the possibility of big increase in government support prices for agriculture produce. Now, Emami, Dabur, Hindustan Unilever and Colgate have the highest rural exposure, so these stocks will be in focus. The brokerage is also saying that the pressures from Patanjali, which had earlier impacted the company's market share, is also now behind. The brokerage has upgraded Dabur's rating to buy and have hiked the target price of Dabur to 415. And lastly, it also says that Emami, Dabur, ITC, Varun Beverages and Jubilant Foods are the top consumer picks.
Thanks for that, Sumit. Of course, we will be watching out for those stocks which are on the brokerage radar. But one of them, of course, was a Titan company where we have seen strength coming in. It's also trading near lifetime highs, and we've seen it move above levels of, well, okay, 1,000 as per indications of the pre-open rates. Chandan, if I can take up Titan with you, how are you viewing technical variables in this one, and what's your view here?
Yes, quite positive on Titan, and first of all, happy Akshaya Tritiya. Talking about the Titan, it has seen the open interest addition of around 7 to 8%, and we started to witness call unwinding at 1,000 strike, because in last 4 trading season it was finding this mild hurdle near to 991, 993 zone. Yesterday it has surpassed and made a high of 999, expecting a positive opening, and the stock can see the move towards 1,045, 1,050 level, while on downside 975 is likely to act as a support. So expecting more momentum. It is trading at new lifetime high, and the open interest addition indicates that momentum could continue going forward.
Okay, so let's take the consumption theme to Vinit and see what he has to say about the fundamentals. Vinit, let me just address the FMCG sector, because we're getting a lot of reports, and we're also getting mixed cues, because the largest concern perhaps here is valuations. And while we've seen some positive cues coming in for the likes of HUL, people are getting a little more concerned with something like a Nestle or a Britannia. What's your view here, and what are the top bets when it comes to you in this sector?
So I like niche plays. So one of them is Emami. I think they've got their act together around their products, and there is very high likelihood that some of their products can be 100 crore sales turnover products. And in the large cap names, I like ITC, because the valuation differential between the big boys and ITC itself is very large. And with the rural theme playing out now, I expect the stock to narrow down that valuation differential which has come about. Now, one important thing to understand about the rural dynamics is the the per capita spend of the economy. If we can largely divide our market into 3 sectors. One is the nouveau rich and the well-to-do who have got a Western lifestyle. They are well exposed, and you have a 200-300 million odd of population which is in the aspiring category. So this is what is going to drive demand. And if you see, the tail is very long, you know, at the value point of the market. And with India's per capita GDP expected to move to around $1,900 per ton, this is the point where the hockey stick effect starts playing in, you know. And we are on the verge of a threshold of a very long runway of consumption spends increasing beyond expectations of the general masses. And that is why you're seeing valuations being so compelling. You know, people are factoring in not now 1 to 2 years, they're factoring in the DCF valuations, this volume growth expanding significantly.
Okay. Yeah, I mean, not without reason that Nestle is doing what it is doing, trading very close to new highs. As the pre-open rates have settled down, we look at Vedanta being the principal winner, about 1.5% higher. That is a return to strength for Wipro, about 1.25% higher. ICICI Bank might start off marginally higher, but the index by itself, even though pointing towards an uptick, doesn't have too many constituents which are doing really well. But look at the mid-cap end of the market. There is strength in Phoenix Mills, VIP, Thomas Cook, and a few others. But again, no blockbuster moves that we're seeing. From a trade perspective, Bhavin, VIP yesterday showed some strength, moved up in the final half an hour of trade. Today likely to start off another couple of percentage points higher. What do the charts say here?
VIP has been consistent performer. I believe that since level of 200, we have not seen any major correction setting in for that particular counter. And the trend continues to remain very positive in this particular stock. I believe that since it's majorly in an uncharted territory, it can move even closer to level of 480 to 490 in very short period of time, since the momentum remains very strong. At the same time, on downside, we have seen very good amount of base formation, that is somewhere in the range of 340 to 330. Though it's from current level, it's much lower, but I believe that those levels will continue to remain very strong support. So my trade on this particular counter would be on a positive side.
Okay. Minutes away from market open, let's tell you all you need to know to stay ahead in trade today. Fortis Healthcare receives unsolicited non-binding interest from Fosun Healthcare at 156 rupees a share, a stock likely to start off 1.25% higher.
ACC, HDFC Standard Life and Mindtree report quarterly earnings today.
Tata Sponge reports strong set of numbers on the back of significant margin expansion.
And Talwalkar is placed under additional surveillance measures with effect from today by the BSE.
And in brokerage calls, Edelweiss initiates coverage on future supply chain with a buy rating, sets a price target of 862 rupees per share. CLSA upgrades Dabur to a buy, raises price target to 415, and Morgan Stanley downgrades Titan to equal weight, raises the price target to 1065. Okay, that's as far as all that you need to know. Vinit, Bolinjkar, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time and you being with us this morning. The equity market's likely to start off about 0.25% higher. Quick thoughts from Deven Choksey. He joins in on the conversation as well. Deven, good morning. Thanks so much for joining in. What stood out for you, Deven? I mean, let me ask you if you have a thought on Fortis and this whole deal surrounding. Tomorrow could be the board decision, but from a minority shareholder's perspective, somebody is holding on to Fortis. What should he or she do?
Yeah, good morning, Neeraj. Well, I think the simple proposition here would be that I think since the bids are revised upwards, for the minority shareholders, I think this is probably, I think, a better opportunity. According to me, I think till we see a final bid coming in from whoever the suitor is, I would not like to take any further call on the stock. If I am holding on to the stock, I will better hold on to it, I think, for the time being. Obviously, I think anybody who is putting new money into this company is likely to drive this business, I think, significantly higher. That is how I think we read this business. A lot of shortcomings which we have seen in up till now, I think could possibly get corrected with the professional management coming in and driving this particular company. So from that perspective, minority shareholders may have relatively better time going forward. However, as I said, I think we'll wait for the final numbers to come out before putting across our view on a near-term basis. But on the long-term basis, yes, I think one should stay on with the company. That is what I think our take would be.
Okay. Deven, stay on. So much more to talk about, but just minutes away, rather less than a minute away from market open. So best time to take in the top stock calls for the day from our experts.
Right, yeah. So Bhavin, we'll come to you. What's your top call for now?
Looking at the way markets are going to start, I believe that metal names will again come into focus. So we have been pretty much consistently positive on those names and continue to like Vedanta and Jindal Steel and Power from both the stocks from the metal names.
Chandan, how about you?
With ITC and ICICI Bank. ITC expecting a move towards 275 to 80 zone. ICICI Bank expecting really short covering towards 300.
And then Bhavin, thanks for joining us and giving us an update on the markets as well as your views for our viewers. But with that, I'm going to toss it over to you, Neeraj, as far as the opening is concerned.
And certainly seems to be a bullish stance from our experts because 4 stocks as top calls and not just 2. Typically, we have 1 stock each. So let's wait and watch if indeed this bullishness percolates well into the trade. Deven, Choksey, stay on. We'll just talk about some more things with you. But 9 seconds left for the markets to kickstart trade. We'll have a start which is marginally in the green. The question mark only is, can we delve further from there and can the Nifty Bank participate? About 0.25% higher for the key benchmark indices. The Nifty Bank, again, 0.25% as well, so about 63 odd points. I doubt that the mid caps and the small caps will be doing much different. So about 0.25% a piece, I would believe, for both the mid cap and the small cap indices. Yeah, just about that. The mid cap space about 1/3%, but in and around those levels. The heat map, I believe a fair sprinkling of green today, maybe very little red. Yes, just about a column of red, fair sprinkling of green. Vedanta amongst the principal gainers. That aside, we don't have too many stocks moving around on the large cap space, about 1% a piece for some of the others. And again, not too many losers. Infosys marginally off. But aside of that, we don't have too many heavyweights which are down and out in the red today. Titan flattish in the session, but only Vedanta really worth talking about from the large cap space. Aside of that, a splattering of green, but it could go either direction. Quick thoughts on stocks which are in news or which were hitting new highs as well in the last few sessions. So firstly, Tata Sponge Iron, very strong Q4. Margins have moved up 1,000 basis points. That's led to the stock starting off about a couple of percentage points higher. So good start for that. Stocks which are trading close to the new highs. So Bajaj Electricals, RT Industries, Midhani, which has had a fabulous run the last few days, up about, or rather down today, but otherwise has had a very good run. Maybe some of the larger names, the likes of MRF, Avenue Supermarts or a Nestle, these two, while trading near all-time highs, aren't really starting off on a big bang note. Let's see if during the day there are some trades there. Last but not the least, the companies which are ahead trading going to come out of the numbers today. So HDFC Standard Life about 1% higher. Mindtree is the really interesting one that I'm looking forward to. ACC, all eyes out on the volume growth. Agam, what are you spotting?
Neeraj, advances pip the declines in the ratio of 4:1 on the Nifty 500 index, and I'm looking at substantial gains in JBF Industries, which is up 4% for now. It's followed by Phoenix Mills, which has also picked up pace, and we're looking at another 4% increase there as well. Gains coming in something like a DCM Shriram, where of course the sugar companies have been in focus of late. This is also up as much as 3%, followed by VIP Industries looking at strength, up 3%, as well as RB Infra, that's also advancing by as much as 3%. On the losing end, weakness continued, in something like a Bombay Rayon Fashions, which is down 2%, and Bhushan Steel, well, that's down around 1.6% as well. Some correction coming in Max India, that's also down as much as 1%, but on the whole, the momentum clearly is with the gainers for now, and well, at least as far as the Nifty 500 is concerned, we're looking at gains in JBF Industries, Phoenix Mills and DCM Shriram leading the pack. Neeraj.
Well, that's the sum and substance of the gainers versus the losers. Let's see, Eicher Motors too, continuing from where it left off yesterday, about 1% higher. Not too many losers, as we said, on the benchmark indices. Deven Choksey still with us. Deven, what did you make of this resolution plan that has come out? I mean, minority shareholder of Electrosteel. I'm not really talking about it from an Electrosteel perspective, but does this give a rude jolt to some of the others which are in this process as well? I know a lot of people who've been banking on Bhushan Steel as a stock doing really well post being bought out because it will be great for minority shareholders, so on and so forth. Does this Electrosteel episode pour some cold water on that theory?
Well, I think I wouldn't know that because I have not gone into that part of the detailing so far. But all that I am saying is that from 1.5 million ton capacity, I think the company already has the ability to go up to 2.5 million capacity. And Vedanta Group, as name is known for, I think they would probably ramp up the capacities, I think, faster than what probably one has seen in the earlier case. So given that kind of a situation, if you are a shareholder, certainly I think somewhere down the line, I think you have a better prospects to talk about. However, in the current situation at current price, how does it work? Honestly, I think I need to do my math properly and then probably I think opine on the subject. But the view remains strong as far as I think the acquisition of the company by the Vedanta is concerned and the future prospects therein as far as I think the investors are concerned.
Deven, good morning. How are you playing the FMCG sector now? And I want to remain focused on the larger players such as ITC, HUL, you know, something like a Nestle, or for that matter, well, perhaps Emami as well.
Well, I think a reason to remain extremely positive about this particular sector, and I would think that coming 3 to 5 years as we see the visibility, given the rise in the per capita income, given the kind of rural penetration which we are seeing in the economy, my reading says that I think many of the FMCG companies probably would be in a position to produce absolute volume growth in the vicinity of around 10 to 15%, which could translate to higher digit of revenue growth beyond 15% for some of these companies. Primarily, I think we find that the companies have been playing the strategy very well. And within that basket, the companies like Britannia and Nestle, I think we find them relatively better off comparatively. Even ITC for that matter, I think they are relatively better off. The fact that I think they are creating the newer categories of the products, particularly for companies like Britannia, where they are talking about serving 4 meals in a day. These kind of product categories which are not existing, which they are building in right now, I believe that I think going forward they would have relatively better times from the what you call value addition coming out from this particular new product categories that they are bringing in. So yes, I think there may be quarterly pressure on the margin for some time because of I think the new launches, but generally ITC, Britannia, Nestle kind of companies, they remain relatively more stronger in the FMCG basket, though they are premium traded. I must say that I think one will have to buy when the market really gives the time correction or maybe the price correction. In such situation, it would be a better opportunity.
Okay. Deven, really appreciate your time. Thank you so much for joining us today on Bloomberg Quint. And while it's a few days later, but wishing you a belated happy birthday as well.
Thank you, Neeraj. Thank you.
That's the view from Deven Choksey of KRChoksey Securities. On that note, with the markets trading flattish now, the Nifty Bank slipping into the red as well, let's get in the next special voice. Shyam Sekhar, founder and chief ideator at iThought, joins us right now on the show. The last time that we spoke to Shyam, he was selectively bullish. He specific thoughts, and we'll talk about all of these which he shared with us the last time as well. Well, good time to get from him. What is he doing now that the wall of worry seems to have been climbed by the market? Shyam, thanks so much for joining in. The last few days, in a manner of speaking, have been a revelation. The markets weren't in the best of technical structures. There was this danger of the trade war as well as the Syrian strikes or the strikes from the US and Syria, geopolitical tensions. Despite all of this, we've had about a 450-point rally on the Nifty in the last, 9 or 10 trading sessions.
I think markets will keep going up and down, and we'll find reasons for going down, and we will go up probably simply because we are tired of the reasons to go down. I think that is where the markets will be for some time. So I think these ups and downs have to be taken in our stride. I personally feel the real risk to this market comes from the quality of investors who are coming in 2018. and the quality of investors who are coming to this market in 2017. I think that's a risk which we cannot sidestep. This market, you will find that the more saner voices in the market will actually be suffering at the hands of the people who don't have the kind of sanity they carry. I think that's a risk which there is no escape from for our market, and I think 2018 will again teach us the same old lesson.
So Sekhar, I'm assuming that you are worried that the quality of investors which are entering the market right now are not that great. But don't you think that would be a good thing, because that would probably give you more of an opportunity in the markets then?
I think that investing is a business in which in every aspect there should be quality, whether be it the companies, the sectors, governance, the kind of public debate we have on policy, and it as much applies to the quality of investors we attract to the market. I think simply having everybody coming in is not good, for the simple reason that most of the people who are coming in are more thinking that the weather is better here, and they're more fair weather kind of characters. And I think that these people, the moment they see that they have not made more than a fixed deposit return for a brief period of time, I think they have their patience, hourglass runs dry. And I'm seeing that as an advisor in many cases where people don't have patience, and they are wanting to keep on switching between various asset classes, thinking that which one will take them immediately up. So I think that the Indian investment ethic is overstated. It is exaggerated. Indians are highly speculative, and especially the aspirant class is extremely speculative, and you are going to see the effect of that this year.
Well, that's interesting. Okay, Shyam, let's talk about what's happening on purely the valuation front, right? We are having this conversation with Professor Aswath Damodaran at about 9:30 as well, but one that I spoke to him earlier, and I was asking him about the kind of valuations that some of the consumer names are getting, and whether it is all right at times and phases in the market for companies which trade at higher valuations to get even higher valuations because of the promise of growth. Do you see that playing out over the next couple of years because of GST and other factors, that the volume growth numbers could surprise on the upside, and therefore an HUL or an Emami or a company like Titan for that matter could continue to enjoy elevated levels of valuation, and therefore will not really see the risk of a significant pullback from where they are currently?
See, when you have very good news into the price, when you factor in very good news into the price, when that good news actually happens, what the market will look for is sustainability of that good news. And this has been our lesson right through in the case of companies which have been outlier companies. You take from 2000, I would say, you take Infosys for the decade between 2000 and 2010, it did not do too badly. And I can say the same thing of several other companies, including the pharma pack. So when you are factoring only the very best news into the stock price, you need to sustain that news if the stock price has to sustain. I mean, in terms of valuation, if that valuation has to hold, then the good news has to keep running at the same rate as the valuation has run up. Generally, that doesn't seem to be the case. So you will have a slight slack in the good news. And sometimes the good news can turn into bad news, like you had in the case of tech and pharma. I think defensives are as much prone to receiving news shocks as we have seen in the past. And I think that markets will take it in its stride. Initially, the market will be in denial, and then it will crack. We are going to see this trend play out repeatedly in defensive as well. I think that there is a cyclicality within the defensives also, which basically is arising out of our tendency to overvalue these businesses and not necessarily to the business fortunes. If you look at Infosys, it has done steadily. If you look at most of these defensives, they have done reasonably stable performance over longer periods of time. But because we tend to overvalue them, there is a cyclicality in valuation that will come in. And I think that I don't expect that consumer can be exempted from that. Having said that, there may be some parts within the consumer space where there is a high share of unorganized. And I think that there could be gains from GST because of gain in market share. I think the profiteering clause is definitely going to hurt consumption stories, because people have not really taken what is fair and legal as per the provisions of the GST laws with respect to profiteering. So there are going to be some hits out there. So I don't think that everything is hunky-dory. However, there could be a shift from unorganized to organized in the consumption space in some very select parts. There we could have some valuation adjustments or better sustainability of valuations.
Okay. Shyam, one final thought really, and that's on organized retail. These stocks and these businesses seem to be doing well. The stocks seem to be doing even better. Where are you on whether or not there should be an investment at such heightened valuations on these spaces, even though the growth numbers or the growth prospects look to be promising?
I think we can't look at organized retail as one industry. I would look at food separately from clothing. I would look at footwear separately. I would look at each of these separately, because I think the buying behavior and the potential for disruption is different within each segment of organized retail. So I would not look at it as one segment. Having said that, I would not buy into valuations which are very high unless there is a clear case for the company to create growth without incremental capital. If an organized retail company can grow at 20-25% for over 5 years, if we have visibility of that growth, and I am confident that that company will not require any additional capital, then one finds the case for paying a little bit more or even moderately more. But otherwise, I would tend to wait and watch for some extraordinary situation in those places where one can get in. I would not blindly get in or habitually invest into this sector.
Right, some interesting thoughts coming in on the consumption sector as well as defenses. But Shyam, thanks a lot for joining us and giving us this perspective on the markets. Of course, we will keep tracking a lot of cues and a lot of earnings as well from the sectors that Shyam has been talking about. I just want to pull up Indian Hume Pipes for just a second, because we've seen a considerable up move. This is largely on the back of an order win of around 108 crores. And there you have it. It's advancing in trade today. But, you know, if I leave these markets aside, I'm even more excited about what's coming on the other side of the break. Neeraj?
Yeah, unmissable, really. I had a great time, and I hope viewers have too. You wouldn't want to miss out on this very special discussion that we've had with the guru of valuations, Aswath Damodaran of Stern School of Business. That's coming up. Stay tuned to Bloomberg Quint.